Welcome to Bears in Exile. Today is November 15th, and this is the market overview. Looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. So, we're still doing the little sideways Macarena dance, two-step waltz fiasco. And Olay. I just can't help myself. This is oh, we ended today on the Dow with a perfectly formed spinning top with super legs on it going off in either direction. Nice, round trip all day long. We had a nice down move. If it had stayed there, there'd been a nice bearish signal. Had a nice up move where it looked like it was going to test the previous high, maybe have a breakout, backed off from there. So essentially taking everybody for a ride and ending with the indecision candle. How about that? Now, looking for other clues. Yes, we're still above the 200-day moving average. We still do not have a fully complete, nice-sized green bar in totality above the 200-day moving average, so we don't have that kind of a tell. We do have the middle Bollinger Band line. Looks like it's crossing down, maybe in an attempt to get below it. In which case, hey, that would be a bullish signal. And certainly, the bulls are within striking range of a breakout. We've said that a few times. They just haven't got their act together. We still have more bullish bar forming, and we're still below the upper price consensus level. Now, how about our indicators, our secondaries? We have no downtick in Guppy. We have it's pretty darn uniform. No real excessive separation to speak of. So that's all clear for the bulls. And our secondaries, downtick on the CCI, downtick on the 14-day RSI moving average, pointing down once again. Uptick on the fast stochastic, uptick on the slow stochastic, and downtick on the RSI, downtick on the histogram, and what is that? Side tick on the MACD histogram. Not really much to speak about. Maybe we're getting a reset of the stochastics to meet up with the 14-day RSI moving average before it finally actually goes down. That's entirely possible. But this is just a wait-and-see candle, and really just a kind of a wait-and-see with the indicators as well. SPX. Also, a spinning top. Oh boy. We're having some cross in the middle Bollinger Band into the short-term moving averages, losing our space, our place above them, which is not good for bears. Side tick on the CCI, down tick on the 14-day RSI moving average, up tick on the stochastics, down tick on the RSI, down tick on the histogram, the MACD, and a slight uptick on the MACD histogram, actually. How about that? So once again, not too much to speak about. Now how about, just for fun, let's go into the 60-minute and see what we see. Well, we see that we had a little blip at the end of the day. I guess that would be a bearish engulfing downtick. Downtick needs a resolution right about 125.5.5. That's not far away at all. But we have the CCI in overbought ticking down. We have the stochastics rolling over, possibly turning down. 14-day RSI moving average also rolling over, pointing down. Downtick on the RSI, downtick on the histogram, and yet to see a cross on the MACD. But overall, in the 60-minute time frame, doesn't look too great. Maybe that's just a retest of the bullish forming bar, but regardless, indicator-wise, doesn't look too great for the 60 minutes, and it's going to be very similar for the Dow, so I won't rehash that twice. But yeah, and you could say Oh, there's all kinds of head and shoulders, shoulder, head, shoulder, shoulder, head, shoulder, and then maybe a failure at the shoulder again. But I don't know. Maybe there's some kind of a weird little dealy there. You could also say this is an inverse head and shoulder with the shoulder, head, shoulder, and off to the moon we go. So a very confusing formation here. Head and shoulders, two of them, with an inverse head and shoulders in the middle. And who knows what the heck it's doing over here at the moment. Maybe it's trying to figure out what the heck it is. Couldn't blame it if it was. VIX. Wouldn't you know it, spinning top after our gravestone doji yesterday, actually closing slightly above yesterday's close, which you would think would mean the markets should be red, and they're not. Middle Bollinger Band still below the short-term moving averages. We're still above the 200-day moving average, well above the 200-day moving average, still above the psychologically important $30 mark, and still trying to do something with that flatline bar. Now notice we have, a top, a lower top, and a lower top, and a lower top, and a lower top. So, and at the same time, you have a higher low, higher low, higher low, higher low, perhaps higher low. So we're in a wedge. Woo, wedge. And the same thing can be observed in the SPX. Higher high, lower high, and who knows what, maybe lower high. Higher low, higher low, higher low. And the Dow. Higher, or high, lower high, perhaps lower high, and higher low, higher low, higher low. Anyways, just some random thoughts. VIX 60 minute. You can see we're getting the hook up on the CCI, trying to get out of oversold. Same with the fast stochastic, slow stochastic still pointing down. 14-day RSI moving average hooking up. Up hook on the RSI, and downtick on the MACD, slight uptick in the MACD histogram. So, overall, not bad looking on the 60-minute chart for the VIX, but we need to see exactly what happens. TNA. Okay. Fat body, spinning top, same little wedge formation we talked about on the down SPX. Uptick on the CCI, trying to get out of oversold. Slight downtick on the 14-day RSI moving average. Stochastics pointing up. Downtick on the RSI. Downtick, or actually side tick, but negative on the MACD, and slight uptick on the MACD histogram. Mixed bag. And we need to break out one way or the other. We still have the bearish bar in effect. We still have the middle Bollinger Band above the short-term moving averages. And we did close above the upper price consensus level today. That is a good thing for the bulls. But regardless, fat body, spinning top. Spinning tops are normally not my friend, but that is what it is. Now for the really interesting part. UUP. We had a gap up today, ended with a spinning top. We really got above the upper price consensus level. We made a new high from recent events. It actually got exactly pretty much to this other previous peak that we had back here with the candle on the, what is that, the 11th? Yep, on the 11th, and backed away from it. So that's interesting, and it is bullish, and you can see the short-term moving averages really bouncing away from the bar, which we had talked about a couple videos ago, that would be very bullish, and certainly it is. Still have the middle Bollinger Band below the short-term moving averages. We're still above the 200-day moving average by a good clip. And now we have exceeded the major price consensus levels for this month and the previous month, which is also very important. Uptick on the CCI, getting too overbought. Slight downtick on the slow stochastic, trying to get out of overbought. Uptick on the fast stochastic. Uptick on the 14-day RSI moving average. Uptick on the RSI. Uptick on the MACD histogram. Uptick on the MACD. We do want to see a test of the upper price consensus level just above 2220. That would be fantastic. But it is extremely interesting to me that even with this gap, this higher close from yesterday, that we had a green Dow, a green SPX, and that is very odd. Very odd. FXE. Where are you? There you are. Similarly, spinning top on FXE. Notice we have the big gap. Notice that we gapped through the lower price consensus level for this month and the lower price consensus level for the previous month. This is very important, and if it can hold below these, we should have a natural test of the previous low. Short-term moving averages breaking to the downside, getting expansion, looking very healthy. The bearish bar is trying to reestablish itself and gain strength. Middle Bollinger Band line above the short-term moving averages. Downtick on the CCI getting to oversold. Downtick on the 14-day RSI moving average. Downtick on the fast stochastic, uptick on the slow stochastic. Downtick on the RSI, downtick on the histogram. Downtick on the MACD. And with all of this, lower close and all that jazz, the market was up. Now that does not compute. That is either the currencies are wrong or the market is wrong. Now we do have a spinning top, and this could reverse. Maybe we'll get an uptick, and it'll have to do a corrective move and then a retest of the bar. But regardless, this is wrong. So very interesting. Perhaps the most important thing to be watching, UUP and FXE should dominate the market, and today I don't know if it's an anomaly or if the currencies just got it wrong, but one or the other is wrong. GLD. Alright, we have a little it's not even a hammer, doesn't even have a real body. But short-term moving averages pointing up. We are getting some penetration of the short-term moving averages by the middle Bollinger Band line. We're still above the major price consensus level from 2 months ago, which is very interesting. Notice that it kissed it today, right there, and backed away from it, showing that this level still has some importance as support. So very interesting, and I do hope that we get a test of the major price consensus level of the previous month up here at 176. Bullish bar is continuing to form, gathering strength. Downtick on the CCI, upticks on the stochastic, the 14-day RSI moving average, very slight uptick. Downtick on the RSI, downtick on the histogram, side tick on the MACD. So even though the indicators are somewhat mixed, the moving averages tell us that this is still bullish. So very interesting, very, very interesting. Moving on to SLV, and it's also interesting to note that with the dollar gaining quite a bit today, healthy move, that gold just sat in place. I mean, if it was all about just the dollar being more valuable dragging gold down, it should have gone down. If it was all about uncertainty, it should have gone up. And in all of that, it just stayed put. So maybe we have equilibrium at the moment between uncertainty, which I believe is rising in the background, and the price of the dollar, which is going up, creating this equilibrium. Just a theory. Like I was saying, SLV, perfect mirror of gold. And that it is sitting here is a good thing for silver bulls, as the bearish bar is continuing to take damage as the short-term moving averages are still contained within the bar. Oh, come on. Uptick on the CCI, uptick on the stochastic, slight downtick on the 14-day RSI moving average, uptick on the RSI, slight downtick on the MACD histogram, slight uptick in the MACD. So I'm still of the opinion that it needs to get as high as it can and hold. I was hoping that it would be up here, but as of yet it looks like it's content just to sit and whittle away at the bar. Hopefully we'll get a move up soon, but we can also see that the middle Bollinger Band line is crossing and getting above the short-term moving averages. It isn't quite there yet, but is very close. So something to watch. And there it is, a very lackluster day, and we're going to have to see which way it breaks. It is going to break one way or the other because it is running out of room, but we shall see. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.